In this video, I'll take a look at how to trade something known as a doji. And a doji is essentially a neutral candle, although there are various flavors of it. But really what you're looking at is an opening and a close price that is either the same or very close to being the same. This is one of those things where it is a little bit of an art form, because some people will say that it needs to be an exact open and close being the same. Some people will say that, if there's like a tick or two difference, that's fine too. So really, at the end of the day, though, you should assume that these two mean the same thing, because essentially what they do mean is that the market is undecided during that time period. In this case, it would be Litecoin on the daily chart. There are a few other ones. There's a gravestone doji, which means that the market rallied and then broke back down during the day. That's a pretty bearish sign. There is a dragonfly doji, which is somewhat bullish in the sense that it is unchanged, but we did initially try to break down, but the sellers were repudiated. There's the long-legged doji, which just simply is a longer version of a doji. They all mean the same thing, though. They mean indecision. So, really, they are a bit difficult to trade in the sense that they are probably not one of your more reliable candlestick patterns. So you have to add a filter to it. Some people will come in and just say, well, buy or sell dojis. And that's not really the way it works in the real world. For example, what you're looking for is multiple dojis. So I'm going to go down to a 4-hour chart here. And this is an example here. There's 3 dojis in a row. There's something that isn't quite a doji, but it's similar. There's something that isn't quite a doji, but it's similar. But what you're looking for in a scenario like this is you're looking for some type of change in attitude. So as you can see, when I draw these 2 lines, the dojis kind of spell out the indecision area. So for about 16 hours or so, the market was trading in this little area. So what you want to see is a close below the support or resistance. And in this case, it was the support. And we did, in fact, break down from there. So where do you go looking towards? One of the most obvious places would be previous support. Had we broke higher, it'd be previous resistance, assuming that you had it. We're not at an all-time high or something. So that's a quick and dirty way to look at this. You can put indicators on to go right along with it. So I'm going to go ahead and put this indicator on. This is the 9 EMA, and you can see that it did break lower on a close lower of this little range. So it makes sense that you continue to go downward. In a sense, this is almost the same as trading a rectangle, but in this case, it isn't a top or a bottom. And essentially that really is what it is. It's the market kind of not really knowing where to go and then eventually making its decision. So let me go ahead and get rid of this and see if I can find some others. They do happen quite a bit. It's not that rare. You could even go so far as to say that it is probably one of the more common setups. Again, though, like I said, it isn't necessarily the most reliable setup. So really, you want to see multiple dojis form. So you can see that the dojis were bouncing off of this area here. This one was probably the most dojiest of doji candles, if you will. And you can see that there was obvious resistance just above. And it's also shown by these wicks. Once we broke out, we went straight to the next potential resistance area and then pulled back. Not a huge move, but it does double this area, much like a rectangle. That would be your minimum, obviously. These do happen time and time again, and you'll notice that once we broke out of this area, the big green candle got support from the 9 EMA. Now, you can trade just a single doji, and some traders do, but the more you get in a row, the more success you'll have as a general rule. Now, again, that's not always going to be the case. You'll notice that we were in a downtrend here in Bitcoin. We rallied a bit. We formed a doji right here where we had seen previous resistance, right at about $7,100. You put a stop loss on the other side. You sell once you break down below it, and you can see it ends up being a nice trade. I'm going to go ahead and put an EMA here, and I'm going to, although you could use a 9, I'm going to use a 20, just because I like the way it behaves on a daily or on a intraday time frame. And you'll notice that there is a doji right here. The market had been rallying a bit, and then it's just kind of hanging here at this moving average. You could also make an argument for a certain amount of support here at, just call it 6,600, just to give it a round figure here. It's actually a little bit lower than that. But you can see that the market had been hanging on to this area. The fact that the 20 EMA has come into play formed a little bit of a supportive candlestick here known as a hammer, which will be in our next video. But you can see that we kind of stalled here, and then we broke the top of it and then shot straight up. So all things being equal, you're with the trend over the last several hours, and the fact that we broke the top of the doji suggests that perhaps that indecision has gone away. Another thing that I would point out is that in this particular run, you can see that there is a gravestone doji there, which in theory is very negative. However, it can also be said that once you break above the top of that, that's a certain amount of resistance overcome. So when you look at it, and then here, and the 20 EMA all kind of coming in together at the same time, that does suggest that perhaps there's a little bit more to go here in Bitcoin. In the next video, I'll take a look at two of the most powerful candlesticks out there, the hammer and the hanging man.